Welcome back to our gold's weekly update. Gold's prices moved lower since our previous report last week, mostly affected by the very good employment report in the US. The report confirmed the US economy is still very capable of creating new jobs, and with the current 3.5% unemployment rate, it does display some confidence, removing some risks in the US economy. The most significant updates affecting gold prices are detailed in this report. Starting with US-Chinese relationships, gold traders could be in a constant watch of the US-China developments, especially this week. The negotiations seem to be ongoing, but no indications on a possible deal or not have been given. The Chinese, on the one side, have been making it clear that they would be in favor of signing a deal on the foundation of equality and mutual respect, and as soon as possible. However, they could be in an uncomfortable situation, as new tariffs on Chinese goods by the US are coming in the upcoming weekend. This breaks into two scenarios for gold traders. If the tariffs come into play as forecasted, then this could be seen as a sign that the Phase 1 deal may have a long way to go prior to being signed. In this case, we may see a bullish reaction for gold, as it can also be an indication that the matter is stalling in negotiations. On the other hand, if the US withdraws the tariffs, it could be an indication that negotiations may be at a more optimistic level than the market estimated, and traders may find more reason to sell gold, as this would somewhat ease tensions between the two nations. In either case, gold is expected to react and increase volatility in both scenarios. Furthermore, as time is ticking off, heading to the closing of the year, as long as the matter remains unresolved and no updates without specifics are given on how negotiations are doing, gold prices may undertake bullish tendencies in our view. On a separate note, the upcoming FOMC meeting on the 11th of December could be of great interest for gold traders. Gold traders can use the upcoming event in many ways. For example, in the case of an aggressive day trader, which could take advantage of short-term movements as the meeting unfolds, or for a long-term trader attempting to paint the picture of the US economy in the next 6 months and is ready to position his ideas through gold trading. Facts that could prove valuable for traders include the 3 rate cuts that the Fed enacted in its previous meetings, leaving the interest rate at the current 1.5–1.75%. Yet, regarding tomorrow's meeting, the FOMC is expected to remain on hold. If the forecast is realized, we may see a bearish reaction from gold traders, as the outcome could indicate that the risks identified by the FOMC in the past are under control and are seen retreating. In our view, that could be seen as economic risks in the US economy dropping and an improved economic outlook being on the rise. Please note, our team will be preparing a special report for the event that you may use for further investigation. Goldman Sachs' bullish view on gold. Goldman Sachs released an interesting report in the previous days, providing its own outlook on where gold prices could be heading in the future. More specifically, the US bank sees a strong uprise in gold's value, which it sees moving towards $1,600 an ounce over the next year. It based its views on many reasons, but the most important in our opinion is political uncertainty on trade disputes, US presidential elections, increased demand for gold due to negative interest rates, and recession fears in the US. It seems Goldman Sachs does not see many of the current matters around the globe being resolved in 2020, thus they may expect gold prices to appreciate on this. As a conclusion, our opinion is that gold traders at the moment are mostly driven by US-China developments. That could be the main driver for gold prices, and it also affects many economies at the same time. Gold has made an impressive run over the past 12 months, rising nearly 14%, yet economic growth in the US and China could be keeping the shiny metal lower at the moment. In addition, traders may have more confidence in long-term growth than any other factor, and gold may be the way to express it. Moving on to the technical analysis. Gold remained between our 1479 resistance level and our 1460 support level, as both the levels were very accurately selected. In the previous days before the US employment report, gold moved higher and tested the 1479 resistance line, but was unsuccessful in breaking it. However, in case of a move higher, the precious metal could be looking to test our 1492 resistance level and even aim higher for our 1504 line. In the opposite direction, an approach to the S1 1460 support line sent the metal even lower to the 1450 or even to the 1444 line, both levels last seen in November. The RSI indicator below our chart is currently running nearby the 50 level, implying more ambiguity traders may have at the moment. This could be due to anticipation of tomorrow's FOMC meeting, where traders will definitely take action. From all of us here at IronFX, best wishes for solid trading.